Hello traders, it's John. It's Sunday night here at Trader Growth School, and we're just diving into the charts for our Sunday study to take a look at the futures market and get ready for our outlook for the week. See if we can't do maybe a little bit of forecasting and look ahead at some areas where we'll be interested in taking some trades. For futures, we'll be looking at gold, oil, natural gas, and of course the E-mini, which is the S&P mini futures contract. So we're going to dive in right away, jump in. We're going to start on gold, and we'll move forward chart to chart. I'll try and make it simple in the future moving forward. We'll be doing a lot of this in the live trading chat room, which will be an excellent tool to be calling out live trades. We'll be analyzing the charts, looking for risk reward, both in futures, stocks, some swing trade opportunities for everyone, just trying to get the most out of what we can. Let's dive into the charts and see what we have here. Coming over, you can see we have our flexible grid, which is where I basically have my one screen setup where I'm always monitoring 4 futures at one time, the 4 futures that I actively trade. In this case, gold, oil, natural gas, and the ES, which is your S&P 500 E-mini future. Let's go ahead and jump into the gold chart first, see where we're at, and talk about ideas moving forward. So here we are. We're on the gold chart, and we're on the daily time frame. This is my setup that I use when I'm looking for the markets on Sunday nights. I use MACD, I use my RSI, and I use volume flow indicator. They're all very useful tools. But what I'm looking for when I'm trying to identify this is I'm looking for trends. I'm looking for trend changes. I'm looking for any kind of change in volume that would indicate there's a change in flow. I'm also using open interest at sometimes, and I don't want to get all of that into all of these videos because they would get very long. So I just want to give very, very broad ideas about what I'm looking at this week to trade. So gold has been on a very strong bullish run. If we look all the way back from our August-September timeline when we hit this low under 1200, I was talking with a few students a long time ago. Any buy around the 1200 level on gold would have been a very, very strong buy for a long-term bias to the long side, given this period of consolidation we had in here between this 1200 and 1240 level. As we broke out now, more recent price action, we're off of highs, and we've pulled back. This is providing some decent trade opportunities for us here on the daily setup. I have a Fibonacci range that I've established in this area, which I'm not sure is 100% correct. I would have liked to see better interaction with this 61.8 level in these 3 candles here, but we're somewhat close, and I could adjust this if I really needed to make this work a little bit better. But in all honesty, I really like where we're at right now, which is this 23.6 level. And for those of you that know my charts, my 200 exponential moving average is my yellow, and the 50 exponential moving average is this light blue line. So what I'm looking at here, for me personally, we've made a fresh high, we've made a lower low, and now we've made a lower high. So after the panic selling last week in the market, global fears, Fed talk, we had this massive day where everything kind of just shored up, and the market said, you know what, this isn't the end of the world, so gold kind of sold off, and we broke this uptrend that we were using. This was a nice little uptrend support that we broke, and we have a nice candle of indecision. So from a daily standpoint now, I'm starting to become bearish on gold, at least maybe back down to this 1280 level. We'll come in on the hourly, and I'll explain more. If you are a former student of mine or a mentor student, you know what setup that I'm looking at here. This is a beautiful cross and a beautiful, beautiful bounce here at this 50 EMA on the 1-hour chart, giving us some more downward momentum. If we continue to stay under the 13 EMA on the hourly, I would look to see continued price action to either retest our low in here or, you know, obviously push lower. But as long as we remain under this 50 EMA, I'd say that we're in a very strong trend for sellers to continue selling. We almost have a MACD cross here below the signal line, below the 0 line. So this means that this histogram is losing momentum. Our MACD line is about to cross. Our RSI is pointing down, and our this is not on balanced volume. This is the volume flow indicator. Our volume flow indicator is also below the zero line. So there's good confluence here that the trend will continue. But right now it's hard to tell. Obviously it's Sunday night. We're very low volume. This is all speculative. We'll have to see how we trade in the New York session and somewhat overnight in the Asian session. So now that we're done with gold, let's move on and take a look at oil. CL is what I trade when I'm trading oil, which is light sweet crude, West Texas. We'll come out to the daily chart. We're well off of our highs from October. We've pulled all the way back down. December, we had an incredible low in the mid 40s. And since then, we've been on a steady recovery in price. Some areas where I was looking at of interest was $50. And you can see in here I've had a couple micro levels. This is the channel where we traded some challenge trades in. And since we've had an incredible doji candle on the daily, or a hammer candle, excuse me, since this hammer candle back on March 8th, we've been nothing but full-on bull mode, making higher highs. We've had some congestion in here at the $60 price, which would be assumed based on psychological resistance. So let's talk about a trading plan for this week. Our relative strength remains incredibly high. Our MACD is above the signal line. The only divergence we have is our volume flow indicator, which is now below the signal line, which is a little concerning, but I'm not going to say that the trend's over here. We still have plenty of room. I am personally watching for this trend to continue into two specific areas of previous resistance on the chart. I would like to see us maybe trade anywhere between the 64 to 66 level before we even start talking about reversals in a long-term sense. That's assuming no fundamental news comes out about OPEC, or, which I believe is very true, and the story will drive us back down into the 40s later on this year, which is going to be global oversupply stemmed on the back of a global slowdown in economic growth. But for now, we're with the bulls. So we're going to be looking to buy higher highs every day for breaking out trend following strategies until proven otherwise. This week, EIA, we have American Petroleum Institute and Baker Hughes, as always, our three main events that we have to be watching for on oil. So Tuesday, Wednesday, and Friday. Keep your eyes out for all of that information. That'll give us clues as to whether or not we'll continue this run even higher. As long as we stay above 60 and above these previous daily resistances, I really don't see any reason as to why this can't move higher. If we fail at a particular level, then we'll look to start and try and take some shorts. But for now, I say remain bullish. We're incredibly bullish. We're above 13 EMA on the daily. We're having this golden cross. There's a lot of scenarios happening in here where we can really push and trade to the long side. Let's move on to natural gas. So here we are on our natural gas chart, and we're on the daily for the year. I have been avoiding natural gas given its volatility this year. It's been very dangerous. At one point, contracts were over $11,000 a contract in natural gas, which is insanity. They're never that high. This has been an historical level of volatility in the natural gas market. We've broken multi-year levels up here when we started to push towards this $5. We're all the way back down to $2.67. For me, last week I was incredibly bearish when we rolled over. I'm still bearish on this outlook. We have a nice downward trend. We're underneath the 200 period moving average, we're underneath the 50, and we're now kind of following the 13 EMA down. One of the things that was a big trigger to me on this short side bearish momentum is this price is making incredible lows, and our MACD indicator is actually in bullish divergence. So that's very good. We have an RSI where prices for the most part remained under the midline of the oscillator the entire time, which means that our relative strength remains with the bears, and our our volume flow indicator here is also continuing to show some lows. So this is a seasonal play for now, for the next few weeks. The idea here is the sentiment, the reason why price keeps falling is that natural gas is in an area at the time of year when people aren't necessarily running their heaters, and there is no big draw yet for running air conditioning units. So right now you're in that windows open, nice weather for the majority of the country, and you're in a seasonal where the draw is very low. So if we get into a situation where we have the EIA report on Thursday where we have a larger build, we could see continued momentum down here to retest our recent low, and then we'll trade from there and see how things look. For now, though, given that there's not a whole lot of downside or upside from here, I'm going to say that unless you're looking to swing trade this, I'm not seeing very much intraday potential. See how we do when we get back up into this 290 area, maybe to take another rejection or to go long if we shore up maybe a bottom here. But for now, I'm not really interested in natural gas. I think there's too many unknown factors. Let's take a look at the E-mini finally. And this has kind of been my bread and butter this year. I've been in and out of this a whole bunch of times, and this is a really good setup. So this chart's going to look a little bit different than my other charts. I have a Fibonacci level that, believe it or not, I actually plotted this Fibonacci range back in November. November 28th, I plotted this Fibonacci range, and you can see it's exactly the same. I have some other lines on here where I was taking trades previously. I wanted to clean it up for the study video. But my point is this is a range that I have been in and I have been using, and there is significant interaction with key levels. 32.8. There's beautiful interaction here. We got a full retracement here. I would have liked better interaction at some of these more extended levels of the Fibonacci range. But for now, I'd say that where we're trading is fantastic, right? 61.8, we had a doji reverse higher. 38.2, we've had some flirtation in here with this 2800 level where we're now trying to push back up and see some more movement. So once again, I don't see any reason to be bearish, even though I am bearish as a whole. I got to go with the strength of trend. We're about to have another MACD cross above the signal line, which is an incredible sign of strength. RSI is above our midline. We're in the upper third of the quadrant. And the only real issue here, is we don't have any kind of continued on balance volume or volume flow indicator above 0, but it's the S&P. I mean, it is what it is. If the market's moving, this is moving, about 80% of the time. If you're short on the S&P, you're wrong. So you almost always want to be long when you're trading the ES. And in this particular instance, we're no different. If we go into the hourly chart on here, you can see that we're into Sunday's price action and we're already gapping and trying to push higher and maybe even retest highs overnight, at which point maybe it would constitute a sell-off in pre-market tomorrow before the New York session. To trade this, once again, I'm looking to be long anywhere above 2,800, to retest. And I hate to be that guy, but if we have a quiet summer, we could just have a slow roll all the way back up to all-time highs. I'm not saying it's not possible, but I'm certainly not saying it's impossible, if that makes any sense. I know this is a real simple breakdown, but the truth is when you are in the futures market, you don't have to do anything very exceptional, guys. You don't have to be incredibly intense with your analysis unless you're on the hourly chart and you're looking to pick time frames. This is a broad analysis of where I think we'll be heading this week and how we should be approaching the market. When we're in the live chat room, obviously when we're taking trades and we're looking at hourly charts all the way down to the 5-minute charts for entry, the criteria for trades is much more precise. Right now this is just kind of a forecast. So keep your eyes anywhere above, on the ES, anywhere above this price level. 2,800 has proven to be support. We need to stay above that level, and if we can break above this, say, 2870 level, I think there's room for significant upside, to push to 29 and further should the market continue and we have no nonsense coming out of any geopolitical party. So that's pretty much it, traders. This is it. This is my first Sunday study video that I'm putting out. As I move forward, I hope to be able to get a little bit more better at these, have a little bit better rhythm and flow, and explain information on the charts a little bit more in depth. As this is my first video, I didn't want to get too crazy, but I'm trying to just give you ideas in the direction that I'm looking to be taking trades. Really, it's about spotting opportunity. There's no real setups here where I'm dialing in exact numbers. I'm waiting for the hourly chart and the 5-minute charts to tell me those things. But for now, this is just a broad outlook for the week moving forward. I'll be doing these every Sunday night, and then when the chat room is live and we're launching our Mastermind room, we'll be doing a lot more in-depth, very specific entry exit criteria on trades. We'll also be looking at swing trading on stocks and day trading momentum low float stocks when the market is there. If the market's not there, we're not going to spend all day chasing it. But if it's been like it's been, where you're seeing 200-300% movers again, you'd be a fool not to pay attention to it. You can make an easy $10,000 or $20,000 in a week by just capitalizing on some of those moves. So with that being said, guys, grab a book, pick something up to read tonight, calm your mind, get ready for the week ahead, plan a trade or two, pick a market and really focus on it. Don't be jumping all over the place. Do the best you can to dial in your trading this week. Let's get to the next level. Anyone looking for coaching and mentoring, as always, reach out to me. Otherwise, I hope everyone the best. Stay hungry and humble, guys. I thank you all very much. Have a great night.